Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, January 28th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice we continue to trend higher in a very clear uptrending channel. That's just the nature of the market right now that we're in. Again, this channel at some point will likely break at some point, but for now, that's the rhythm of the market at the moment, with all these counter trend rotations here being defended for a continuation higher. We talked about this last week when we were at these highs, and I mentioned, it looks like we're running out of steam up here, and if we pull back, we have a shot to come back toward the previous month's close. And if we do that, it could be an opportunity to buy and continue higher. So we're right at that point right now. Again, it's not a guarantee that we will continue higher. Obviously, anything can happen at any time, and by the end of the day, we could be pushing through these lows. And so again, it's going to be interesting to see if the market can withstand this support right here and hold above this zone and rotate higher. Because if there's a failure to hold the blue dot here on a closing basis, that opens up at least a retest of the lows of the month, and perhaps we see a retest a little bit lower. Again, one thing that we do have to keep in mind this week is that it is Tuesday ahead of FOMC Wednesday. We have the FOMC statement and the Fed interest rate decision tomorrow at 1 o'clock p.m. Central Time, 2 p.m. Eastern, and that's going to give us another key data point. Again, that data point right here, you can see that this is the previous one, December 12th. This is October 30th, and these last two have been bid so far, and the market has continued higher. Is that going to be what we see again? Are we going to see it be taken bid again, especially with improvement across the board in the economy for the most part? Or are we going to see it be taken offered like it was earlier last year when we saw price get taken offered right after a couple of statements here. Number one in May when this thing went offered, and again in July on this pullback, and then here is September on the pullback. These three all taken offered here. These last couple here have been taken bid. So we'll see how this thing plays out, but right now in the uptrending market, everything suggests more upside until proven otherwise. Okay, let's take a look here at the NQ. Now the NQ over here is performing very similar to the ES, so not much to add here other than it continues to hold at this major LVN. That's one we talked about last week again, as we talked about this uptrending channeling behavior, that if we pull back, we have that LVN to serve as support, and we can see how price has held there over the last two sessions now. Again, we are trading ahead of FOMC tomorrow, so again, this could be kind of a range-bound market over the next day and a half as we head into that statement. Again, overall, everything suggests more upside unless we have a failure to hold that LVN at around 8,900. That would open up at least a retest of the lows of the month at 86.78. All right, let's take a look now at crude oil. You'll see here with crude oil, this one has sold off tremendously. We got up here into the 65 level, rejected the 65 zone, and dropped in one day back toward 60. I mentioned at the time that suggests that we will likely go back to the middle of this key range at 57, followed by a push to 54, and then ultimately between 50 and 52, which is this zone right here. That's the zone that has led to several rotations higher over the last year, and so we're approaching that zone now. At the moment, we're seeing a little bit of a counter trend bounce, and we could see more of a bounce that leads to one more flush. But again, while this area has been support, it has been it's been quickly traded, so it's only been there for a day before it's bounced back sometimes, right? Or just a morning. So we'll see how this plays out. But again, if it does dip below, say 51, it could be a very quick rejection with a shot at returning back up. Again, the trading range has taken us all the way back up to 64s. The quick move would be back to 57. So again, something to consider here for crude oil as it continues to channel within this large trading range. On a day trading basis here right now, inside day with a downward bias, again a rejection of prices above 54s could be an opportunity to get back in ahead of a continuation toward lower support levels. All right, let's see here. Gold is next. This one has broken through the top of the narrow 10-day range. We talked about that before. Here's the narrow 10-day range there. Here's the compression. This is the breakout day here where it pushed through 1570 and 1565. Right now it's kind of testing from above. You can see today's low is 1570 and a half. So it's broken through 1570 and it's come back to retest it from above. This suggests that there could be a bit more strength ahead here toward the previous high here at 1613.30. Again, we talked about before 1565 to 1570 was the line in the sand, as that is a zone that had seen rejection previously here. But then after this rejection here, it was starting to hold, and it just couldn't go down. Instead, it broke back above, and this is all suggestive of more uptrending price action for now. So we'll see. Again, 1565 to 1570 remains the pivot here. If it can stay above that zone, a little bit more upside could be seen. A failure to hold 1565 again could drop us back to 1540 or as deep as 1525, which could be another buying opportunity on the short-term basis. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.